Well, we have United Kingdom Producer Price Index coming out. And if you've been trading with me for a while, you probably know that I usually skip this one. I mean, simply because it usually doesn't deviate sufficiently, and when it deviates just a little bit, the moves are all good. So I usually skip it, but today for some reason I decided to trade it because it may be important. The price is in a decent level. It has room to go up or down, and it is coming out before the major CPI announcement, which may be, one of the most important CPI announcements of the year. And PPI supposedly sometimes, once in a while, can predict CPI. I think there's going to be a little bit more attention on it today than normal, and that's why we're treating it. First of all, we have 3 different numbers, well actually 4 different numbers coming out at the same time. First of all, we have, all the numbers are coming out for April. Okay, so for April we have PPI input, we have PPI output, and we have PPI output core. Okay, we have the months over months numbers, and we also have the year over year number. In addition to all that, we have the UK House Price Index coming out for the months of March. So we have the PPI input and PPI output numbers coming out, and basically the input numbers are the numbers that are pretty much prices that producers have to pay for their goods. And of course, input stands for that because they have to input before the manufacturer. They have to input something, and those are the price index for basically for raw materials. Now the output is actually an index that's a lot more stable, and it's the output prices that producers sell to the wholesalers, and it's a much more stable index. We also have the output core coming out. However, as you may know, in the UK they don't care much about the core. They just care about the headline numbers when it comes to the CPI numbers, and I would assume the same applies to the PPI. Now, both of the PPI, first of all, one of the reasons why it's not as important as CPI is because it's an indicator that covers much smaller area. It's a manufacturing sector because it's producer price index, and the manufacturing sector, as you may know, may be very important in manufacturing countries such as Japan or Canada, but in countries such as UK and US, it's a very small sector of the economy. As you know, UK and US import a lot of stuff, import a lot of finished goods, so even if the producer prices come out high, many times it simply means that UK may have to import some stuff from countries that can deliver it cheaper. But the reason it's important is because it's kind of a leading indicator, and it somewhat does influence the inflation. First of all, the PPI input prices are very much leading. Obviously what the producers are paying for now, that may affect the prices they may put out in the next few months. And at the same time, whatever the producers are charging right now, the wholesalers, may hit the retail market in another month or two, and it will affect the retail prices or the consumer price index somewhat. But bottom line, it's all theory. The most important thing is whether the Forex players care about this indicator, and whether they're going to buy or sell pounds based on that, and whether it's going to create a move, and whether we can make money on it. From my experience, we can see a move on this indicator by 30 or 40 pips. And I've set my triggers pretty conservative here. I mean, most likely they're not going to be hit because the deviations on the output are very, not that often happen. It's a very stable indicator. I mean, the input can go nuts. I mean, input 1 month can come out at -2%, another month come out at +2%. It's a very volatile indicator, but the output is a lot more stable. So if you look at my trade plan, what we have there is we have regular 12 pips limit triggers, and we have the conservative 20 pips limit triggers. And the regular triggers, if the deviation comes out at plus 0.4 or more, it would be a possible buy on GBPUSD. It would actually be a reading of 0.9%, and it would be the highest month-over-month reading since the beginning of 2000s, maybe even before that. So it would be a big surprise. It would set a new record high, and I think the pound is in a very advantageous level right now. It's pretty low, and I think it could maybe even go as much as 50-60 pips up. On the other side, if the PPI comes out deviating minus 0.5, comes out flat at 0%, it may be a possible sell for GBPUSD. Because it would be flat reading, which means that there is no inflation on the produced sector, and that may eventually affect CPI, and there may be some assumptions made about inflation slowing in the UK, and they may not need to do as many interest rate hikes that everybody thinks they should. So that is the situation there. And of course, with the rising oil prices, it's only natural for the UK PPI index to come out high. So if it comes out flat at 0% or negative, something is very much slowing down there, and it may be negative for the pound. Conservative 20 pips limit triggers, we have +1, or an actual reading of 1.5%. That would be a humongous reading on the output, obviously a record high. And on the other side, -1, or an actual reading of -1.5%, would actually set a record low. We actually do have a record low of -1.5% already. I'm sorry, -0.5%. A deviation of -1 with a consensus of 0.5 would actually cause an actual reading of -0.5. And that's been actually the record low that was set in this indicator. It's never came out below that number on the month-over-month figures, and it would be a big surprise. And in that case, I'm going to be willing to use 20 pips limit triggers with 4 units as the entry. Now, whoever was here for the New Zealand trade must be very happy, because we made a lot of money on that one. That was a nice one. It took a while for it to manifest, so there were plenty of opportunities to enter after spike. And it seems like all the Oanda people got a great fill there on the pre-spike also. And actually, I gave an after spike pretty much at the same price we got filled on the pre-spike, so that was a pretty nice trade there. Let's hope we get something nice out of this one too. And let's hope it doesn't disappoint us, because it is a relatively weak indicator. "15 seconds, 10 seconds, 5 seconds, okay, no trade. Came out exactly as expected at 0.5, but the input prices came out lower than expected. Core came out lower than expected, so we're seeing the GBPUSD going down there a little bit.